Background, I would say I just wanted to walk you through the data. So how the market is, let's say, growing or maybe behaving, so that you should know it. So now, now we'll talk about the asset management or asset servicing part. What comes under asset management, and how that asset management is different from the investment banks. See, investment banks, they are different, and the asset management companies which are different. So if we now talk about, let's say, the two different businesses, so let me just chart out. So in the entire industry, you might see the two types of businesses. One is sell side of businesses, right, and another one is the buy side. So now your question would be, sir, what do you mean buy side and sell side? See, sell side, it means the businesses which actually, businesses which actually sell securities, sell securities in the market and raise funding for business expansion. So for example, let's say companies like Zepto, PhonePe. If you ask me, let's say international companies like PayPal, all right, even Twitter, which is X, or SpaceX. All right. So all the companies which actually they sell the securities in market to raise capital. Right. And who facilitate them? Basically, investment banks. So investment banks, let's say like JP Morgan, BNY. In Indian market, we have like HDFC Bank or ICICI. So they have an investment department as well. So where they actually provide services to the the clients, means their clients. Right. Investment banks. And on other hand, if I talk about, let's say, if I talk about buy side, the investment. So buy side, it means the investors. So now when we say investors, it could be, let's say, individual investors or institutional investors who actually means who purchase securities from the issuers and provide funding to them for business operations. institutional investors. Okay. So now your question would be, sir, when we talk about, let's say, individual, there are two types of individual. One, the individual investors. One is like retail investors. When we say retail, it means like us, and another one is like HNI investors. HNI. So HNI, it means like rich people, okay, who would be very rich. For example, let's say Amitabh Bachchan, Shah Rukh Khan, or Sachin Tendulkar, MS Dhoni. Even he is also, let's say, the big investors in this, means comes under HNI category and investing huge money in different startups. So I have seen that he has somewhere around 500 crores investment portfolio in market. MS Dhoni, right? So and when we say retail people, it means the people like us. We all are retail investors. And if I talk about HNI, as I said, for a reference, you can write it down. So HNIs could be sport persons, or in short, instead of, let's say, sport persons, I would like to define in a legal term, which is minimum investments they can invest, like at least 1 crore. 1 crore. So it means total assets value should be 5 crores, and income average, I would say, more than 1 crore, then only that the you can call it as a this qualified investor. Now your question would be, sir, who qualify them? Of course, chartered accountants, we have in India, they provide qualification certificates on the basis of ITR returns, right? And on the basis of, that qualified certificates, the HNI investors, they can start investing in, startups and all. And for a retail investors, you don't need to file any tax filing, you don't need to prove it that you are like retail investors, because your appetite would be very low, and you can invest with minimum of, depends on the schemes, but you can even invest 10 rupees or thousands or 500s and even more. So that depends, but that's how you can differentiate retail and HNI. So if I talk about now the institutional category, so in an institution, you can you can see there would be different the entities like mutual fund, then hedge fund, private equity, right? So these are the entities which comes under institution. And you might see, let's say, under private equity or sometime even the separately where the business is they registered as a venture capital as well. Right. So these are the companies which we treat them as an institution and they invest. Apart from this, you might see the family funds or family fund offices. Those companies also comes under the institutional category. They registered as an institution, but I would still like to consider only these are the prime categories. But sometime I have seen in a different jurisdictions where uh, the family houses treat as a under individual category only. Family funds, and even you can treat them as an institution as well. It depends now, means if the family funds, let's say, registered as an institute, let's say trust, then you will have to definitely consider as an entity. If not, if let's say if the family is like unregistered ones, then you can treat as a family funds as an individual, means at an individual level only. Okay. But main point is like they all they would be like buy side market players. Okay, they would be like buy side market players. I hope you get it. So buy side means what exactly? I have already explained. Buy side, it means who actually purchase the securities from companies like Zepto, SpaceX, PhonePe, PayPal. Why? Because they need a funding to expand business. On BCG report, we have seen the same thing, correct? So companies, Volkswagen was saying like they're looking for a 5 billion. There was something like T-Mobile again was looking for somewhere around $5 billion. Then who provide funding to them? Basically, see, as a businessman, what they need a funding. Then who provide funding to them? As a retail investors, our appetite would be very low. So we cannot, means as a retail investors, we cannot contribute to the businesses, for a $5 billion, $10 billion, $200 billion. No, we cannot. And let's say at a very early stage, would be very difficult to contribute funds to the business, and would be even more risky as well, because as a retail investors, always we look for a liquidity, and if there is no liquidity, then there is no make sense to invest your funds. As simple as that, right? So I hope you get it. So all the like individual to institutional, they work at a buy side, and which actually purchase securities from the companies directly. So it means companies sell the securities. I'll write it. And the the businesses, the buy the securities, buy shares and hold. Buy shares and hold. Simple. So now if I talk about asset management, see, I'm not talking about sell side institute. First, be clear with that. I'm not talking about this one because already we have discussed a lot. I'm talking about buy side asset management. It means I'm talking about buy side businesses. Buy side, it means I'm talking about mutual funds, I'm talking about hedge, I'm talking about private equities, venture capitals, who actually play very crucial role, where they offer funding to the businesses who are actually which are in a need of a funds. See, when we say deals in a BCG report, what we have seen like deals word, correct? Merger and acquisition or deals. Where do you see here? uh, 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 yeah, deal makers or deals. So when we say deal, it means, don't get confused with the word. Read this one. In India, let's say the Walt Disney Company and Reliance Industries received conditional regulatory approval for an 8.5 billion merger of their Indian media assets into a joint venture. So it means there's two companies that are looking for 8.5 billion dollars. So we can call it as 8.5 billion dollars, which is a one deal. Same for this one, like German automaker Volkswagen agreed to invest in a US based electric vehicle EV maker Rivan to uh, form a joint venture aimed at developing and sharing EV architecture and software. And if you see the amount like $5 billion, which is around, so this would be your another deal. So it means second deal. So don't get confused with the deal words. Same deal words you can also see the wording in investment banking segments, and same words we can call it as like deals in asset management part as well, under mutual fund, hedge funds, private equity and venture. So now, if I talk about, guys, the role of, let's say, buy side and sell side institution in the business model, how both the institute, let's say, both the institutions, how they contribute or how they facilitate to the companies to raise funds. So we'll discuss that in short, so that you can you can understand the linking of IB with the buy side businesses, or let's say the asset management companies. Let's take an example, very plain example, which I want to give it to you. Let's say Zepto company. So Zepto, which is a startup, if you know or if you heard this, and the startup which is in the business line transport. Sorry, not transport. Let me give you different example. Porter, which is a company and working in the transportation business line. Now, as a let's say as a the startup founder or owner, so what's your bigger pain? So bigger pain is, let's say raising funds from the open market. See, at a startup level, you cannot reach out to the banks for funding, and even you cannot reach out to the retail investors, because the retail investors, they don't directly invest in a startup business because of two reasons. One is, as I said, the risk, and second one is liquidity. So startups cannot provide liquidity or buy and sell in a facility to the retail investors, and that's what they need, capital from the very rich people or institutions. Then what they can do, the startup founders like Porter, they reach out to the whom? To the investment banks. Let's say JP Morgan M&A department and consulting basically. So they reach out to investment banks. Then actually the management of Porter, they discuss the business model with investment banks and prepare financial model. Prepare financial model. So financial model which talks about, let's say, per share price, why they are looking for a funding, pitch deck, then business profile, founders profile, the vision, the mission, everything, the merger and acquisition department of the JP Morgan, they actually work with Porter company and prepare everything. Prepare everything. So it means, if I talk about key task, take care of the consulting part, then uh, model preparation, financial model, business profile, pitch deck, short term funding arrangement, and finally underwriting for the share price. And support for sales of securities. And that's what, so when we say sell side, the institution, so it means the investment banks basically provide infrastructure to the businesses to connect with the potential investors, right? And investment banks basically, even through their private network, they send the proposals to the potential investors and request investors to get in touch with them so that they can discuss a business plan, and they try to actually sell the securities of the business to the potential investors, right? And support these startups to raise funds. Okay. So when we talk about now the deal words and how we can link here, see, for investment banks this would be the one deal, the porter would be the one deal. Let's say porter is now looking for the financial model prepare for 1,000 crores. So basically porter is looking for 1,000 crores investments from the potential investors. So investment banks, as I said, JP will take care of the model preparation, profile building and everything. Now your question would be, sir, how investment banks generate revenue from this deal? There are two ways. One, so if you look at this, revenue model for IB. So one is through upfront fee. Upfront fee means they can directly charge, let's say, lump sum amount. It could be 1 crore, 2 crore, 3 crores, 10 crores, right? One package for entire deal. So throughout the deal, they'll provide their support system, everything, and and they'll help to raise 1,000 crores to the porter company. That is like, that would be the upfront fee. Second would be on the basis of the deal amount, on the basis of deal size. Could be, let's say, 2%, 1%, right? 3%, 4%, 5%. So depends on the deal size. Bigger the deal, lower the expenses, and lower the deal size would be bigger the the percentage. Maybe let's say on 1,000 crores, the investment banks they can charge somewhere around 30 to 40 crores as expenses to raise thousands crores from the market. So fundraising, it's not an easy journey, and even it's not an easy process. So you need a system. Without system, you can't do it. And then maybe if you have, let's say, upfront, means if you can manage upfront fee, sometimes they ask for a deposit as well. And if you if you remember, here we discussed about the short term funding arrangement. So if the bank, let's say, provide credit, then they earn interest income as well. So on short-term funding. So these are the prime ways where investment banks make money for each deal. And now if you remember what I said in the discussion, the lower the deals, lower the revenue for the investment banks, and higher the deals, so it means investment banks will make more and more money out of it. And more the money, that is something like you can see positive impact in job market, where more and more investment banks, they can hire professional like us who can manage their business very well. I hope now you can relate that point. Correct? So more deals, more revenue, more upfront fees for investment banks, and they generate more and more revenue. So that's how, guys, business model works. And if you see the degrowth in deals, it means the fundraising activities, right? Then you can definitely see impact on job market as well. So most of the roles like underwriter roles, support analyst roles, business analyst roles, or the, let's say, financial modeling roles or consulting roles, you can see like nobody means no investment banks to want to hire anybody. Impact, they can they announce layoffs instead of hiring people, and that's how you can see the impact of the growth in a deals, or the merger and acquisition activity, how that impact on entire industry. You get it, guys? Yes, no? Okay. So now if I talk about, let's assume it now, let's say investment banks prepared everything, they have decided their fees, maybe 2 crores, 5 crores, 10 crores, and now the investment bank JP Morgan, let's say, is ready to launch porter company on their platform. As a porter deal, status should be open for investment. So once the after preparation of everything, the deal basically the investment banks will open for whom? Open for investment. Open for investment. And then the IBs, the marketing team, they reach out to the investors. For what? Can you guess, guys? For what? Reach out to investors, but for what? Very interesting one. They reach out to the investors for investment, right? Reach out to the investors, but when we say investors, again, you can now try to remember, when we say investor, it means we have these investors, individual and institutional. The retail investors, they can't. The family offices, of course, they can invest. HNI investors, again, they can also they invest. Mutual fund companies, to some extent mutual fund companies, they're allowed to invest, but most of the mutual fund companies, they don't invest in startup companies. Hedge funds and private equities or even venture capitals, yes, they invest, because they do take a risk and invest funds in startup companies. So that's when the buy side role come into picture. So now if you try to understand the buy side role, here buy side role come into picture, and the buy side role would be here. So means basically the marketing team of the investment banks, they reach out to the buy side companies, or investors, and discuss the business model. Same model they discuss. How they discuss? Hey, hi team, I'm from, let's say, JP Morgan marketing team. We have received porter deal. Deal has a revenue model. This is, let's say, something XYZ things. They are well positioned in the market. They're making revenue. They have a technology. They have a system. your money could be multiplied by 10x, 20x in next 10 years. We are looking for a, let's say 1,000 crores. If you have appetite, you can invest through us. We'll take you through the due diligence and we'll help you for everything. That's how marketing team, they pitch to the investors. And if investors, let's say, see, even founders can also directly reach out. It's not something, let's say, every time in every case, it's possible to go through the investment banks, but as a, the porter management, if they have a, the good contacts or connects in industry, they can directly reach out to the potential investors without intervention of any investment banks. They can. But if porter only want to, to go through the proper channel, then channel follow these steps. Right? Channel follow these steps. Then buy side, the companies come into picture. And when we say buy side, as I said, the retail investors, they are not allowed, but HNIs, yes, HNIs can invest. Hedge fund, of course, they can invest. Then private equity and venture capital. So this would be the key buy side players. Of course, mutual fund and even retail investors also, is one of the key player, but these are the key players who actually invest. Wait a minute, someone is calling. So these are the key players who actually invest money in the the different companies. Why? Because if I talk about hedge funds, if I talk about private equities or even the venture capital guys, they always look for such opportunities where they can take a certain amount of risk and multiply their money. Because investing is a game, right? Investing is a game. If you find, let's say, right gem, then you can multiply your money. As simple as that. But if I talk about hedge or private equity or venture capital and even HNI, their risk appetite would be very high, right? Their risk appetite would be high. Their investing, the capacity would be high, like 100 crores, 200 crores, 20 crores, 1,000 crores. Their risk appetite also would be high. And that's what even they don't care about, even if something happened with the business. Because to invest in a companies like Porter or startup companies would be highly risky. Highly, it means highly risky. Let me tell you something. In India, in last 1 or 2 years, 28,000 startups, they have been, shutting down their doors for permanently, and they don't want to now continue with the business. Why? Because of funding. See, maybe if you can see the stories, maybe in movies or maybe let's say news, that look, this startup got funding, that startup got funding. If someone got a funding, maybe let's say they are very fortunate, but to raise funding by following the steps, it's not everyone's cup of tea. Everyone can't do this. See, I know thousands of startups, guys, because I'm working as the investment banker as well with as a freelance with some of the companies. The hundreds of businesses, thousands of even businesses, they send profile to us. Hi sir, please help me for a funding. Hi sir, please help me for a funding. And out of thousands, only 1 or 2 businesses, the investors they pick for further steps. Only 1 or 2 or 3 or max 10. This is the reality of funding market. So it's not something, let's say, easy process. If you have, let's say, family background, and let's say your colleagues, friends, or buddies, let's say, they're really, wealthy, might be they can just put you, 1,000 crore, 100 crores, 2 crores, 10 crores, 20 crores in your business as a first paycheck. They can. And in that way, it could be easy process for you even. But let's say if you don't have that background, if you are, let's say, from a common, let's say, the normal background, then you will have to follow all the steps to go through. Again, your question would be, sir, what if I don't want to follow any steps like this and to pay, upfront fees or fees to the investment banks? Then still, is it the possibility to raise funding? Yes. Then in that case, you should have to have in a very strong product or technology, or it could be, let's say, business model which can bring some revolution. Then all the market participants like HNI, hedge funds, private equity, venture capital, investment banks, all they will reach out to you. All they will reach out to you. Why? Because even the buy side companies also, reach out to the investment banks for a good business opportunities. So it means, so it's a win-win situation for a businessmen as well as, the buy side companies. Look, buy side companies want an opportunities to put their funds. They have a fund, they have a cash. And if I talk about entrepreneurs need a cash to scale their business operations to the next level. Entrepreneurs generate profit through operating activities of the business. Right. And if I talk about, let's say, if I talk about the hedge fund or private equity or venture capital businesses, actually, guys, they need investment opportunities so that they can multiply their wealth. And if I talk about the investment bank's role in this whole picture, they consult to both. They consult to both for what? Let's say for investment, buy side companies for finding good opportunities for investment purposes, and for entrepreneurs to sell their securities in the market. But technically, if I talk about, where exactly the investment banks, comes at a sell side. So investment banks, they work at a sell side, but that doesn't mean they'll not support to the buy side institutions. They'll support. And investment banks charge fees to both buy side as well as sell side. But they charge lower the fees to the buy side if the buy side institution, appoint that investment bank as an intermediate person. And let's say it could be, let's say, that the deal expense or advisory expense, or even the broker expenses, where, the investment banks charge to whom? Charge to the buy side companies. So it means, in any ways, you can see a profit of this investment banks, right? But anyways, the condition is there should be some deals in the market. If there is no deals, then it would be difficult. Right? So this is how buy side companies and investment banks role, come into picture together. And if I talk about, let's support a company, now let's take a hypothetical situation. Let's say the Rakesh Junjunwala and his fund, now he is not there, but the Rakesh Junjunwala Family Trust, let's say, interested to invest 200 crores, right? Private equity fund, let's say Blackstone Group, ready to invest 800 crores. Right, and both, let's say, they are ready to invest through equities, right? So now if you try to understand the business model, guys, how the funding works. The porter company, sorry, sell the shares, correct? To whom? To the buy side companies, correct? And buy side companies again provide funding to the porter company through investment banks, right? And that's when 1000 crores needs will be, let's say, the managed, right? Yes, no. How then 1000 crores need will be managed then? And who manage it? Who take care of it? There are several questions, right? So investment banks basically, and that's what they charge fees, correct? To take care of everything. So to meet the 1000 crores needs, so investors basically, let's say, private equity fund like Blackstone Group or HNI, the Rakesh Jhunjhunwala, both, transfer money to the JP Morgan, and then JP Morgan, transfer that money to the porter, and porter company transfer shares, the equities to whom? To the, HNI like Rakesh Jhunjhunwala and private equity company group, that's how basically your funding game works. But in between you might see both the investors or porter company might they can sign couple of agreements, which could be, let's say, for your understanding, SPA, security purchase agreement. It could be, let's say, the term sheet. Right, it could be, let's say, any other documents like uh, the funding terms, which includes exit, or when the investors will receive their the investments value back, or what are the future plans. Everything you might see, the porter company and buy side company both can sign between each other and manage the entire show. This is something also you might see in the business. But again, who helps her for all of this? The investment banks, technically investment banks, the manage the show on behalf of the porter and transfer all the relevant due diligence or documents to whom? To the buy side companies. They actually sign, verify, both parties, sign, verify, and they confirm the investments or confirm the transfer of even securities to the confirm the securities within their the parties, and then they'll confirm it. Look, we have got the funding from the private equity companies. Now the important question would be, look, what is the the benefit of private equity or HNI, let's say, like the Rakesh Jhunjhunwala family trust, who's been they invest money in the this porter company, and what would be their profit? See, there are lots of ways to deal with these transactions, but I'll give a simple example. Simple, it means very simple, so that you can, I don't want to make it complicated, so I just want to give a very simple example. Let's say this investment the was made at the valuation of, let's talk about some key metrics. valuation was 200 crores, which was like pre-money value. Then 1000 crores raised. So total valuation post money, let's say it could be the 1200 crores, sorry, fund raised and post money. So post money valuation would be 1200, let's say, crores. At 1000 crores or to 1200 crores price, let's say the share price, even the 1200 the crores shares was issued in the market. So it means price per shares, it was, let's say, 1 USD or 1 rupees. 1200 crore shares means the funding was raised, and post the valuation post raising funds, the post money valuation which was at 1 rupees per share. And this is what the equity, the same equity which was transferred to whom? To the their participants, right? And same, let's say, equity which is received, like maybe 200 crores received to Junjunwala, and 200 shares received to, again, sorry, 800 crores shares received to the Blackstone group. All right. Let's say this, when you raise funding and as a businessman, if you invest money in a proper direction, then maybe you can, expand your business operations, you can hire new talent, you can develop technology, you can enhance your operations, right, by investing money, correct? So that may lead to generate more and more revenue, right? Am I right? More revenue, more possibility of profit, correct? And value appreciation. If the business is, let's say, highly reputed and generate more revenue, more profit, like Zerodha or Zoe company, all they are like valuable businesses. They are raising, means they are posting 1000 crores profit every quarter, 2000 crores, 10,000 crores, 5,000 crores profit every quarter that they are posting. Are you getting my point? They are posting huge profit. So it means if you invest in their shares, anyways, their shares which are not available, to invest, but still, if you find such as startups, and if you invest your money, in a startups like this, if the startup, let's say, generate more and more revenue, maybe more and more profit, so you can see the share, the valuation, like from 1 rupees to 2 rupees, 2 rupees to 3, 3 to 10, 10 to 20. That's how, the valuation game works. Let's assume it, the business has generated, the 1000 crores profit, and the value appreciation was also, there around 200 crores. Maybe again there will be lots of factors, but we'll assume it, the business try to achieve, maybe let's say not exactly profit, but at least EBITDA what we have discussed already, earning before income taxes, right? Let's say there was a earning as well. Earning, it means net profit. Net profit, let's say around 500 crores, plus this, the value appreciation, it means So you might see, the business will receive brand value, correct? Let's say the porter now it's a brand. So they'll have a value in market. So it means investors, more and more investors which are really interested to invest in their business. So that's how brands, calculate value. If the demand is high and the supply is low, then you might see appreciation in the price. So that appreciation you can call it as a brand value. Appreciation you can call it as a brand value. All right. So now, if I talk about, you know, the valuation game, see there could be lots of plus and minus. Again, I'm giving you just, the high level overview to ensure, so that you guys can understand the linking of IBP and everything, buy side, sell side. Let's say 200 crore, which is the value appreciation. There are different ways to calculate this. So it means most of the businesses, they have a revenue multiple as well to compute the value of, their businesses, and that's how they compute it. For example, let's say the revenue of the business is 1000 crores, then they multiply with 8 or 9. So it means the business value would be somewhere around 9000 crores. And on 9000 crores, investor applies their discount, could be let's say 10%, 20%, and after discounting the valuation, the you can see the value of the business would be somewhere around 6 to 7,000 crores. So that's how business logic works at a very niche level, or very, let's say, at a very ground level, if you ask me. But in general, if I talk about the valuation game, how it works, look at this. Profit and everything, the valuation appreciation, we have 700 crores. Maybe let's say the valuation, this was done in 2022, and this is what we are calculating in 2025. So in last 3 years, the business has achieved the remarkable growth, right? 500 crores as a net profit, or maybe 200 crores as a, let's say, this value appreciation. And sometime what happen, even if there is no profit, still you can have a brand value and appreciation. The reason is on the basis of your product, how you are adding values, and even the expansion as well, like how you have captured the market. If you are a market leader, still you can add brand value even if there is no profit, right? So that basically 700 crores you can add post money valuation. Post money valuation. So post money valuation plus net profit, if you have any, if you have, otherwise not required, then brand value or business value, so that you can add. So that will take you to the current valuation. See this formula, which is not an actual formula, which is something different, you can go through it, but this is just for you understanding how valuation game works. Okay, so don't try to apply in a same way, because at a very technical the ground, you might see different rules which applies, and their naming convention would be different, so you cannot directly relate this with that. But in this example, we have taken these inputs, so we'll assume it in that way only. So keep it limited to this. All right. So now if I calculate the value, which is 1200 crores, the post money valuation, and we have a profit of 500 crores and 200 crores as the business valuation, or appreciated, let's say, the value of the business. So total valuation reached to the somewhere around 100 crores, right? And here, see, the total number of outstanding shares, calculate per share price. So how you can calculate? Come on. You can calculate. So your total outstanding shares. And we have total shares. How much? 1200 crores, right? So we have 1200 crores. So just divide with 12. 1200 means crores quantity. So and calculate the share price, per share price. Quick. Where is my phone? Let me calculate. 1900 divided with 12. Definitely you can see appreciation in share price. So let me calculate. $1900 divided with 1200. So you can see the share price should be somewhere around 1.5, right? Per share price would be 1.583 rupees. So now this price, if you just compare with the price which was allocated to the private equity funds, look at this. So quantity per share price, it was 1 rupees, right? So their investment price, which is at 1 rupees, and the current, see, this would be the book value, correct? So this would be the book value, where at the time the acquisition price would be like book value or purchase value of the investment. So now if you compare the book value with the market value, so market value is this, current market value. Just do the comparison, your own analysis, and look at this. So this value, if you compare, so that you can see the profit, right? Profit of almost 50% in the investment, right? Because at this level, if any investor, let's say, or if let's say this private equity fund want to, let's say, sell it out, the investment, to anyone, let's say it could be hedge fund, where the Black Rock, the brother of private equity, means Blackstone group, both are like brother, because they were like same entity and they got separated. So BlackRock hedge fund and Blackstone both are brother. Let's say now this hedge fund want to enter in the business and want to invest, let's say maybe assume it 200 crores, ready to invest 200 crores. Now here the important point is, if the porter need a funding, additional funding, maybe they can increase their main capital, and the Blackstone group can directly transfer the 200 crores to the porter and porter can manage it. That's the one way. Second, the HNI who have invested money in porter, or private equity fund like Blackstone group who have invested in the Porter Group, see, they can, the dilute their stake. Means the Rakesh Jhunjhunwala or Blackstone Group both can, the divest it means they can directly, sell it out, the investment, sell it out their, uh, the, the, the investments, the own investment, right, to the hedge fund group like BlackRock. How they can directly means with the help of course, the investment banks, they can directly, transfer the equity to each other. So how that happened? So let's say their appetite is 200 crores. Just calculate 200 divide with 1.583 price, somewhere would be 126 crores, the quantities, like 126 crores quantities. Who transfer? The private equity group transfer to the hedge fund group, and hedge fund group transfer cash of 200 crores. 200 crores to whom? To the private equity group. Again, in this deal also, who help to both the parties like BlackRock and Blackstone? Of course, investment bank take care of it. See, Porter has nothing to do with this deal because it's a secondary deal. Secondary deal, it means this is happening in OTC market. Both parties, BlackRock and Blackstone, they want to, they exchange the securities, so they'll take care of it. And later on, they can just inform to the Porter, look, the new investor added, which is BlackRock, and invested 200 crores. So I have sold my securities. So updated security number, it could be different. Price for per shares, it was different. Let's say at this price, see 200 crores, which has been, let's say, invested by BlackRock in Porter. But this transaction, guys, doesn't impact the, the cash flow of Porter Group, because there is no cash in and cash out for Porter. It is just, the other investors who have invested money in Porter Group, they just wanted to sell it out their stakes to the other investors so that they can. This is a one way. Second way is maybe Porter can directly, schedule a IPO at this level here at this price, right, and sell it out this stake to the public through IPO, and the HNI, Rakesh Jhunjhunwala or private equity group, they both can, sell their stakes in private IPO events and liquidate their entire investments or maybe partial investments, depends on their investment strategies or new opportunities if they have any. So this is how actually the game of this, the investing or, the buy side or sell side game actually works, right? So I hope you get it. And even if, let's say, instead of this, if hedge fund, let's say, want to, the directly invest in a Porter company and contribute funding maybe to the, the for further operations, they can. But that is something, again, it depends on the situation, whether business need a funding or not. If they don't need a funding, why, the business will raise funding? If maybe, let's say, if assume it, the Porter Group want to acquire company like Zepto, company like, let's say, other companies to, let's capture the, the market, then they can raise funding from the other market players as well. And that's how they can, just increase the size of their cap table. Cap table, it means the table which include the equity percentage of every partner. So the table, you can call it as a cap table. So this is how, guys, actually flow works. And this was all about the end-to-end flow of the capital raising activity. All right. So I hope you guys have understood now detailed, around the investment bank, like sell side, buy side, right? Why buy side invest? Because here you can see the profit, guys. See, simply you can calculate investment price was 1 rupees and sell price at a 200, crores investment. The price of shares which is at 1.5. So it means there is an appreciation of uh, 50% in the investment. So that's how private equity groups make huge money out of the this private equity investments. All right. Okay. So this was the flow. I hope you enjoyed this or understood this, because we were talking about private equity, mutual fund, and all of that. Definitely, we'll talk about what is mutual fund now, what is hedge fund, what is private equity, what is venture capital, and even family funds in details. But we'll take a now break of at least 10 to 15 minutes, and then after I would like to continue with our discussion. Okay, so let's have a coffee or tea, whatever that you want. We'll connect after the break. So we'll connect at 10, 15. Then let's take a break of 10 to 20 minutes, have a dinner, and we'll continue with the other, the discussion around mutual fund, hedge fund, and private equity. I hope